So good morning, ladies and gentlemen. And looking how many people are attending our event, I understand that all of you are also interested in the same topic as we are. And so it's my pleasure and honor to introduce the beginning of our session, New Dynamics of Asian LNG Market. And frankly speaking, it's a terrific topic. My name is Tatiana Mitrova. I'm head of Oil and Gas Department at the Energy Research Institute of the Russian Academy of Sciences. And looking at the LNG development globally became a sort of my hobby many years ago. And I think all of us in the panel share this love and huge interest to this development. And frankly speaking, there are so many changes in this particular market. Well, it's not a secret that LNG in Asia provides 60% of global LNG demand. But during the last couple of years, there were some significant shifts on the demand side. First of all, Fukushima catastrophe, it has pushed up LNG demand in Japan. And at the same time, economic growth and environmental concerns are actually enhancing and fostering gas demand growth in China, in Southeast Asia. So on the demand side, we see huge expectations and growing need for LNG. But what happens on the supply side? Actually, so far, we can say that this market looks more like tight. But there are also huge expectations for the future development. These incredible, huge Australian LNG projects are coming soon. And there is also a new game changer approaching. And many people and companies and governments in Asia are already waiting for it. This is North American LNG story, which is also extremely exciting and sometimes quite unpredictable. But we see that expectations of this huge new wave of North American LNG potentially coming to Asia is expected to change the rules of the game, or isn't? That's an open question. Anyway, we have these shifts on the demand side, we have these shifts on the supply side, and obviously this will determine how the Asian LNG market will develop, not only in this decade, but also in the longer period of time. So I think these and other questions on the agenda, it is my pleasure and honor to introduce our distinguished speakers. And I would say that the panel we have today, it's really extraordinary. We've got the best speakers on this topic, so use the opportunity later on to ask them your questions. So I will start from the man who sits close to me, which is Don Wallet, who is Executive Vice President, Commercial Business Development and Corporate Planning at ConocoPhillips, who has huge experience in this industry. Then we have Mr. Muraki Shigeru, who is Executive Vice President of Tokyo Gas Company, probably the largest LNG consumer in Asia. We have with us Peter Coleman, Chief Executive Officer and Managing Director at Woodside Energy from Australia, who is leading a number of huge projects which we are all waiting to start. And actually, already Woodside operates 6 of the 7 LNG processing trains in Australia. Then we have Ms. Andayani Yenni from Indonesia. She's Senior Vice President, Gas and Power, Pertamina, and she has spent many years in the LNG business, deep inside the contracting and negotiation process. And finally, I would be happy to introduce Richard Girand, who is Global Vice President for LNG at ExxonMobil Corporation. So you see, we have representation, bright representation from the supplier side, aggregator side, consumer side. And so I think we will have an opportunity to receive quite a 3D size picture of the market development in Asian LNG market. So let me start asking the speakers to make short 4-5 minute statements on how you see the most important questions of the Asian LNG market development. So, Mr. Wallet, the floor is yours.
Tatiana, thank you. Thanks for moderating the session. I'd also like to thank the Congress and the panelists for facilitating this discussion. I thought I would touch on the importance of the North America shale gas revolution and its impact on the Asian LNG markets. But let's start by looking at the significance of the U.S. shale gas revolution. You know, over the past 10 years, the estimates of U.S. natural gas resources has doubled to 2,700 TCF. Now, at current demand levels, that represents over 100 years of natural gas supply for the United States. Shale gas production has grown to over 20 billion cubic feet a day in the United States, which represents about 1/3 of the total output in the country, and that's expected to grow to over 50% in the coming 10 years or so. So what's happened is that in a few brief years, really, there's been a dramatic transformation in the United States. It's transformed from a demand center for natural gas to a supply center for natural gas. And so the impacts are both short-term and potentially long-term as well. The immediate impacts, of course, the United States no longer needs the LNG that was targeted for the country not that long ago. And so those LNG cargoes are being diverted to the Asian and the European markets. The other thing that's going on, of course, is that there's an intense interest globally in the success of the shale revolution in North America. And so international oil companies, nations, national oil companies are working side by side to see if this success can be replicated. And I think that, you know, China is one of the good examples of this, particularly in the Sichuan Basin, where many IOCs are working with the Chinese NOCs to see if we can figure out a way to unlock the vast potential that the China shale resources contain, which is estimated by the EIA to be the largest resource of any country in the world, over 1,000 TCF, which is about the same as the combined estimates of the United States and Canada. So, you know, it remains to be seen how successful that is. Ultimately, it will come down to geology, technology, but there are many other factors that will influence the pace of that. But getting back to North America, as far as the future, of course, now there are 4 projects that have been permitted for non-FTA trade by the Department of Energy. And this follows a study that was commissioned by the Department of Energy some time ago, the results published last year, which basically evaluated the economic impacts of LNG exports from the United States. And the conclusion of the study, when they looked at various export levels, but the conclusion was the more the better for the economy. That also remains to be seen, how many terminals actually get permitted. Of course, there are several dozen that are being proposed. Obviously, only a small fraction of those will probably go forward. But the combined capacity of the 4 that have been permitted, gas has been contracted. Final investment decision remains to be seen for most of these projects, but the combined capacity is around 45 million tons per annum, which is about half the level of what Australia's exports are expected to be by 2020 or so. More will be built, I think. Of course, Canada has its own projects in British Columbia that are being proposed, and they will compete with other projects as well. But, you know, if we look at the demand that's expected over the next 10 years, incremental demand growth of 150 million tons or thereabouts, then what's realistic for North America? maybe they could compete for 1/3 of that incremental demand going forward, maybe as much as 1/2. Time will tell. What does this mean for the Asian LNG market? Well, I mean, it's good news. It's a new source of secure energy supply. It provides greater diversification in terms of geology, geography, and pricing as well. And then again, you know, we'll have to see. It's going to take some time to see how that success can be replicated not only in China but India, Australia, and other countries. But I think that this all portends very well for the energy security of the Asian consuming countries.
Thank you, Dan. Amazing. And Mr. Muraki, what is your perspective on this development?
Thank you, Tatiana. I'm only a poor buyer in this panel, I think. Before I discuss the new dynamics of LNG market, I will briefly explain the demand profile in Japan after Fukushima. After Fukushima, nuclear units have been shut down, and LNG offtake increased to 87 million tons in 2012 from 70 million tons in 2010. Nuclear unit will start to resume those operations from early next year. And in 2 to 3 years, maximum 28 units will be restarted, which will reduce LNG demand by 25 million tons. We will take actions to replace low-efficient steam turbines to combined cycle gas turbines. In addition to those measures, energy conservation will be enhanced. Considering those activities, gas demand will be possibly decreased down to 60 million tons in 2020. However, after 2020, all the nuclear units will be shut down due to the operational deadline. Then, if the competitiveness of natural gas is enhanced, gas-fired combined cycle gas turbines and distributed power systems by combined heat and powers are main alternatives to nuclear. At the same time, conversion from oil to natural gas will be promoted. There are discussions on the development of pipeline network in Japan, which can possibly be connected to Russia to import gas from Russia, and prepare for the development of methane hydrate to be utilized nationwide through pipeline. If those actions are successfully implemented, potential demand through 2030 will be 100 million tons. However, if natural gas cannot enhance its competitiveness, expansion of pipeline network will be limited, conversion from oil will be limited, and share of coal will be increased in the energy mix, particularly in the power generation sector. Then demand of gas stays around 60 million tons through 2030. Then new dynamics of Asian LNG market. Key word is, I think, is the diversification. Diversification of supply sources. Many potential sources are planned, such as US, Canada, Alaska, Mozambique, and East Siberia. We'd like to promote those new sources and diversify sources and contractual conditions to optimize portfolio. Pipeline network in Northeast Asian region will be developed, which contribute to the stable supply and expansion of natural gas market in this region. Contractual conditions will be diversified in terms of the pricing. New price indexes such as Henry Hub and NBP will be emerged. Oil index gentle slopes and ESCA will be reintroduced to reduce volatility of natural gas, which is more attractive for consumers, and to secure the long-term return for producers. Portfolio of long-term, short-term, and spot contracts, as well as the destination flexibility, will lead to the liquidity of LNG market. Then LNG trading markets will be developed, and Asian hub will be possibly created. trading and arbitrage between the Pacific and Atlantic markets will be promoted. Those dynamics will enhance competitiveness of natural gas among fuel mix and promote utilization of natural gas in a diversified market such as power generation, industrial and transportation market, and smart city developments. Stakeholders in the natural gas value chain need to work together for the sustainable development of natural gas market in Asia, which will contribute to the core benefits for producers and consumers, as well as the sustainable development of Asian society.
Thank you, Mr. Muraki. Peter, your company has invested incredible amount of money in the new LNG projects. So what is your perspective on how this market is going to develop? You see the consumers are asking for more diversification in terms of supply sources, pricing mechanism, contract duration. How do you think this will evolve?
Yeah, it's a good question to open with, and particularly pertinent to us as a company that has probably 90% of our investment base invested in the production, liquefaction and transportation of LNG into the Asian market. So it's a very important investment question for us. If I can just go back a little bit and talk about the history, because the history is important and the dynamics or the fundamentals of the business are important for us to all understand, because often what we read in the press and so forth are snapshots in time of opinions, and you've got to put that mosaic together. The fundamentals have been driven by long-term relationships between buyers and sellers, particularly in the Asian market over the last 30 or 40 years. They've been underpinned by investment fundamentals. It's fundamental that the investor who's taking the development risk needs certainty. And it's not just development risk around a project that goes to FID, but it's also the exploration risk that goes into that and the research risk that goes into it before you even get to monetizing your particular asset. Of course, the buyer wants certainty of supply. They want some certainty with respect to the price range they'll get. And so historically, what's been able to make the two of those work, of course, has been an oil linkage, because it's been a predictable commodity, it's a fungible, widely traded commodity, and it's often linked to GDP. So changes in GDP have impacts on oil and vice versa. And so LNG, because it's been a small commodity, has linked to that. I fundamentally don't see a change in that in the future. Whether it's an oil linkage or a linkage to something else, there will be a linkage in the long-term contracts. Long-term suppliers, or long-term buyers, I should say, will still underpin major projects. Why do they underpin major projects? Because they have pricing periods. A foundation buyer has an early mover advantage. They get a preferred price in the first pricing period, and they typically get discounted equity entry into the project. It's a nice deal for them. And of course, then we go to market pricing as you go through price reviews over time. What's in it for the seller? For me, I get some certainty with respect to my investment case. My investment case needs to be underpinned by the banks. It needs to be underpinned by my credit rating as a company. And many of the new projects that are going forward at the moment, in fact, are being supported by smaller companies that have had to go to project financing. So it's important for us to understand that there's a finance risk here, and a very significant finance risk. And are these projects actually fundable if we go to a truly liquid market? The market itself is in transition. It's not truly liquid. The prices we see posted today are a relatively small percentage of the total market and don't represent the average landed price in Asian markets based on long-term contracts. And so on one hand, it's difficult for me to read the press sometimes, because I see these prices out there and I wish I was getting them on my long-term contracts, but we're not. They're short-term and they're driven by market fluctuations and perturbations, and that's what market does. New supplies coming in out of the US, whether it's the US, we don't talk a lot about East Africa, but that's also very significant, will require the same fundamentals. The difference in the US, of course, and Canada is a more traditional investment model, but the difference in the US is the investment model is fundamentally different, and many of the proponents in the US at the moment are using a tolling model or a US utility-based model where the buyer takes on capital risk and also production or offtake risk. So we see the dynamic, the market's starting to move, but the fundamentals are still there. These are long-dated investments, very significant. They'll have to be underpinned by fundamentals of the investment case. Will the market move? Yes, it does. Will it become more liquid? Probably it will. Will trading hubs be established? Yes, they may. But importantly, will the buyer base change? The buyer base is fundamentally changing. There are twice as many regasification terminals under construction in Asia today as currently exist. So the traditional buying power of buyers will start to get eroded over time as different buyers come into the marketplace and have different buying horizons. What does that mean for an investor? It means we're going to have to manage through that uncertainty. We're going to have to offer different products to different buyers. But at the end of the day, the fundamentals of getting a major project off the ground are going to need long-term foundation buyers, and Asian buyers have historically shown that they're excellent foundation buyers, and we expect they will be in the future.
Thank you. Yenni, you are representing one of the most traditional suppliers on this Asian market with a huge history of relationship. What is your vision? Are these changes just temporary short-term shock, or are they going to really reshape the whole market? And do you agree with Peter concerning this long-term fundamental basis necessary for the relationship in LNG business?
Thank you for the questions, Dr. Tatiana. I think I'd better start with the current situation in Indonesia, which is quite unique. Because right now I'm sitting all with those who can identify themselves as seller and also as buyers. But for Indonesia, we are facing some transition from the seller becoming buyers in the futures. And because of that, I think the way we see the market is rather different from previously. In the past, we always look at the market from the seller's perspective, while today we look at more from the buyer's perspective. And this is because, we do believe that in the global market, I think the LNG demand will continue to grow. And I think, again, Asia and Asia Pacific will have the highest growth in demand of the LNG. And I think the issue is that can we keep the gas production, for domestic gas production, can we keep with the pace of this demand? As for Indonesia, specifically for Pertamina, for the recent years, we need to match the need for the gas domestic, and also still we have some potential for export. But as you can see now, the LNG export from Indonesia will remain static, and some contract, as you know, that might be expired in the years to come, and it may also be decreased, depend on whether there will be some development in the new projects, and this will require a strong support from our government. But in the case we'd like to develop the new project in Indonesia, I think we need to carefully consider about the cost curve for the pre-FID projects, given the potential for the oversupply for post-2020. And we need also to push for the early FID to capture the pre-2020 demand. And I think, although that I can say that we may be open to more flexible contract terms, still in terms of pricing, we still have the preference to link it to the oil price. And again, I think if we have some additional production, the target would still be the traditional customer, in this case like Japan, Korea, and Taiwan. But in terms of being a buyer, I think it's very significant that Indonesia will require some gas, and this can only be sourced from, not only from domestic, but also maybe more from the international source. Today, if you look at the current supply-demand balance in Indonesia, which is Pertamina's done the study, only in Java and Sumatra Island itself, we expect the deficit up to 2 billion cubic feet per day, which is huge actually. And you know that the producing area is far from the consumer area. And government is trying to meet this requirement by allocating some of the domestic LNG market but we still need to import. And in this case, we look at the US market, because why? Because at the moment, at the current price, it's still viable to bring it to Indonesia. But it depends on the future price then. That's when we have to see the balance between whether we should go for import or whatever we have in our countries, or we just have to use all gas for the domestic needs. And that's going to really change the status of Indonesia. Today, actually, we look at the difficulties for the next 2 or 3 years is because the demand is quite high, the supply may be there, but we don't have sufficient infrastructure. We are lack of infrastructure in Indonesia, and that's why we need to build this infrastructure so that we can really satisfy the demand in Indonesia. And I think for Pertamina, I guess right now we used to be known as the seller. Right now we will play a key role in monetizing LNG in the domestic market. And as part of the domestic market obligation for domestic LNG producers in Indonesia, the government of Indonesia has allocated substantial production to meet domestic needs. And Pertamina will be participating in monetizing a substantial portion of LNG allocation in domestic markets. And I guess in conclusion, we can say that due to this increased gas demand in Indonesia, Pertamina is expected to focus its efforts to fulfill domestic demand. And Pertamina's role as LNG seller in the global LNG industry may be impacted.
Thank you. Richard, now it's your turn, and actually due to the position your company plays in the global LNG business, I would be very grateful if you could give both supply and demand side perspective and the whole market overview.
Okay, thank you. Well, to make the most of my few minutes for a brief opening statement, I'm going to touch on 3 key topics. First is I am going to talk about the overall supply-demand, global supply-demand for LNG. Secondly, there's been a lot of discussion about North America, and I'm going to touch on the competitiveness of North American LNG delivered into Asia. And then a really key important issue for the industry, particularly on the supply side, is the industry cost challenges. So let's first talk about supply-demand. By 2040, we expect LNG demand to nearly triple, growing to more than 600 million tons per annum by 2040. Of that demand, we anticipate nearly 75% will be here in Asia-Pacific markets. And that's not only the existing importers of Korea, Japan, China, and India, but also new markets in South and Southeast Asia, as just was talked about by Yenni here. In fact, we expect the number of importers to reach 40 countries by 2025, and that's nearly triple of what it was in 2005. Now, on the supply side, we also anticipate several new producing countries, and as technology unlocks new resources, both conventional and unconventional. In the U.S., we expect shale and other unconventional resources to account for nearly 2/3 of production by 2020. And that's nearly, as said earlier, 100 years of supply at current production rates. And that positions the U.S. as an exporter of LNG. Now, however, there are some factors that an LNG buyer should consider when evaluating gas supplies from the U.S. First, the U.S. is several years away from exporting natural gas. In fact, only 4 projects have been approved, and that represents about 51 MTA, and they have received permits to export to non-free trade agreements as well as FTA countries. And there is still some uncertainty over the amount of exports that the U.S. will approve. Now I'd like to talk about the competitiveness. There's a lot of perceptions about Henry Hub benchmark pricing delivered as LNG into Asia. The North American market is a very efficient traded market. The long history of natural gas supply and demand balances in the U.S. and Henry Hub price cycles tell us that the average Henry Hub gas price over the long term equals the cost of supply plus a reasonable return for the investor. Now today, Henry Hub prices are in one of the low price cycles and below replacement cost. And if history is any indication, this cannot be maintained over the long term, since the gas produced from liquids-rich plays is not enough to meet long-term gas demand in North America. The U.S. will eventually need to begin drilling dry gas plays to support domestic and export demand. Now, as said, we have plenty of resource in the U.S., but the current perception of Henry Hub gas delivered into Asia as being the cheapest may change as the U.S. market comes into balance over the longer term. And given the long shipping distances from the U.S. Gulf Coast, we see U.S. LNG cost of supply about the same as other viable projects that will deliver LNG into Asia. Now, this will lead to healthy competition between new LNG supply projects from the U.S., Western Canada, East Africa, and Australia. That's a good thing, particularly for the demand side. But now these new LNG projects will face increasing cost pressures. There's 84 million tons of new LNG capacity currently under construction, and this new capacity is projected to cost $230 billion, or an average of $21 billion per export project. And the important fact is that's more than quadruple the cost for an LNG project developed between 2001 and 2010, 4 times. Now, these escalating costs can be attributed to a number of key issues. One, a need for highly specialized equipment that is provided by only a few suppliers. 2, a limited number of fabrication facilities with the scale necessary to really support and build large LNG projects, and the ongoing need to build skilled workforces. And then finally, many of the new resources are just very remote. So in response, LNG developers are looking for ways to manage these costs through modularization, new technologies such as floating LNG, and then employing economies of scale across the entire value chain. But given the cost of these new supplies, developers like ExxonMobil and my colleagues here will need to secure long-term sales contracts to ensure stability and a return on these investments. Now, there's a lot of risk and challenges in exporting LNG. These facilities are very complex to build and operate, have concurrent interconnected projects across the entire value chain, and therefore require a very successful partnership. And a good example of the partnership of the past and hopefully the future is ExxonMobil in Korea. It was in 1983 with the signing of Korea's first LNG contract with Pertamina of Indonesia that the Korean LNG market truly began to open. And with this contract, Korea Gas Corporation, KOGAS, was born and has since become the largest LNG importer in the world. In 1999, we expanded that partnership with Korea with the startup of the Qatar Petroleum and ExxonMobil joint venture Rosgas. And today, these ventures supply 1/3 of all the LNG consumed in Korea. We didn't stop there. We worked with the local market here in Korea, and Qatar Petroleum and ExxonMobil have been heavily involved in the shipbuilding business. Between 2002 and 2009, the Qatar Ventures, Rosgas and Qatargas, built and delivered 54 LNG carriers, an investment of $13 billion, using the major Korean shipyards of DSME, Hyundai, and Samsung. Now, we expect Korea's role in the global LNG industry to continue to grow as a consumer, fabricator, shipbuilder, and investor. And our long history together serves as a strong reminder, as a strong relationship has been the key to our mutual success. And we look forward to that success in the future. Thank you.
Thank you, Richard. So now let's move to the discussion. Richard, you were talking about costs, and I think it's going to be one of the most intriguing issues in the future development of the LNG market. And actually, I have a $1 million, or I suspect even $1 billion question to the panel. How do you expect this development of North American LNG, both in terms of volumes and prices? How do you see this picture, and how do you think it will affect the Asian market? I've heard a very interesting remark by Anne-Sophie Corbeau from the International Energy Agency when she said, do you really bet that US will be able to provide for 20 years gas at $3 per MMBtu? So it becomes more a question of trust, of bets. What is your view? How will North American LNG affect Asian market? Don, what is your opinion?
Well, I said that North America LNG will be competitive, but it does have to compete with other sources of supply from Australia, from East Africa, Yamal Peninsula, Eastern Siberia, other places around the world. I didn't say it was going to be cheap, and I think there is a misperception out there that Henry Hub sells for $3.50 so we can land the LNG in Asia for 11 or 12 or so, which is perhaps true today with the wide arbitrage that exists because of the oversupplied North American market. And it may be true that some of these converted regas facilities, because they're brownfield sites, will be competitive on a cost basis. But the costs are going to increase after that. With the greenfield sites, they'll be more expensive. And over time, you know, the arbitrage is always going to be consumed by commerce as long as there's free trade, and so you can expect a convergence of prices. Now there's, you know, a few things that can happen to cause the Henry Hub price to increase. One, obviously, is exports will contribute. The DOE study showed that. So you can have demand forces that do that as well. One of the things in the United States is we've seen that the cheap source of natural gas is beginning to fuel what appears to be some form of industrial renaissance, with, you know, ethylene crackers being built on the Gulf Coast again, which we never thought we would see, you know, 25 years ago. So consumption is likely to increase and be stimulated by the demand. But I would not be confused that to expect that the low Henry Hub prices will persist. They will not.
Peter, do you agree with this assessment of the potential North American impact and size, actually, of North American LNG coming to Asia and its competitiveness?
Well, we see two parts of it. The first part, as I mentioned in my opening, is we see North America, we see Canada as a more conventional LNG development. Normal challenges, remote, First Nations issues to deal with, site issues and so forth. So that's more conventional. That's what we see in Australia. That's what we see in Africa and elsewhere. So industry knows how to cost that and will cost that appropriately. The US market, the Gulf of Mexico market, is a vastly different market, and the business model is vastly different. There's a couple of things. We're going through a phase of change. The initial projects are actually working off a backlog of investment that in fact was not performing. So if you look at most of the existing projects, in fact, they're utilizing investments or terminals that were actually installed for another purpose, which means if you go back and say, this industry's got a history of getting it wrong, and we got it wrong 10 years ago when we installed the terminals, we'll get it wrong again and we'll adjust, and the 100 years of history of the industry says we'll adjust to market forces and market factors, and that's what you're seeing in the US at the moment. It's an adjustment. We'll wear off that fairly quickly. Some of that will come to market. The question then is on the supply side. On the supply side, shale gas companies in the US at the moment fundamentally are not making acceptable rates of return. And as Richard mentioned in his opening, that will rise over time because investors will demand acceptable rates of return, or those companies may not exist. I mean, that's just the supply and demand of the marketplace. That's a reality. What's happening in my market at the moment as I try and sell gas into Asia? Well, we're going through, there's three distinct phases. There's the phase of hope. We're in the phase of hope. which is where a value expectation is created in the marketplace. People have seen something that they wish to go for and they're going after and they're trying to factor that in. We'll then quickly move into the phase then of having to deliver, having to build the things and get them off the ground in the time frame and for the cost that we said we would. That's generally a difficult period, but we'll maintain hope through that period. The third period will be reality. And reality will be once we start these facilities up, we see what the market dynamics are. We see as utilities and industrials who need reliable, steady supply, the impacts on our business. And then we'll make decisions as to whether that's how much of that we can take into our particular portfolio. So we actually see there'll be a natural leveling out and a natural equilibrium point. We see North America simply as another supply source that we'll have to compete with in the global marketplace, and the dynamics of cost and supply will always dictate, and the lowest cost will get into the market first. And if we maintain the attitude that lowest cost needs to get in, nobody should ever be carried. Australia's got some cost challenges. We need to deal with those cost challenges. So I see that's where it's heading at the moment. But there's no such thing as cheap gas, at least not long-term cheap gas.
Yeah, and I would reiterate what Peter has just said, that, and as I said in my opening comments, that ultimately in a highly efficient traded market like the U.S., you're going to end up at a cost of supply plus a reasonable return. And we're below replacement cost today, the current price. So that has got to work itself out, as Peter said. The other thing that's going on that has been mentioned is the fact that many of the conversions that are being done in the U.S., conversions of an import terminal to an export terminal, those conversions, as Peter mentioned, have sunk costs for tanks and berths, et cetera, and they're utilizing that. Now, greenfield projects, not brownfield projects like these conversions, they have a different set of economics behind them. They're higher cost, have a lot of environmental issues, et cetera, et cetera. The other thing that's going on is the model, the tolling model that everybody is talking about, and for those players that are essentially do not have gas, they go buy gas, they have no supply that's tied to their project. So this is a new model. It is unproven. The question is, if the ARB goes away, will they continue to supply gas to the customer? Now, ExxonMobil, we're an investor in LNG. We have 8 projects around the world. One of them is on the Gulf Coast, a conversion at Golden Pass. We're the largest producer of gas in the U.S., and we have gas behind our project. And we look at it no differently than the projects that the other LNG projects we do around the world. An integrated approach. The cost of the supply goes into the facilities, delivered to the customer, and we end up providing the customer a competitive price. At the same time, we as an investor making money. The others, many of the other players in the U.S. are not looking at it that way. They look at it as an arbitrage. And if prices change, they may sell into or get higher, and that ARB goes away to Asia, they may go and sell that gas locally. So that's going to create a tension. That is an unproven model in the LNG business. You can't say today if that's a good thing or a bad thing, but it is different. And it's always good to have supply behind your project. Supply that you control and you own.
Thank you. Mr. Muraki, this During the last couple of weeks, I've read already several articles in different oil and gas journals saying that expectations of the Asian buyers that US and Canadian LNG will push a pricing model to more hub-based, that they are not valid, and that there will be huge disappointments in the future. So what do you think? How, in your view, these potential volumes of LNG could affect the rules of the game in Asia?
Yeah, it's the North American LNG will give pressure to undermine LNG prices in Asia. And I think as the US price will become more influential index in the global gas market. And one of the advantages of the US LNG is the cost basis with a reasonable return. It's more transparent. So the differences of the distance, transportation distance, makes the differences of the delivered cost. So it's different from LNG. For instance, LNG from Middle East, almost the same distance to Europe and Asia. European gas delivered price is about 70% of the Asian price. It's a double standard. It doesn't happen on the US LNG. That is one of the advantages. And price, we expect that the US gas price is $3 to $4. So delivered cost of LNG to Asian market will be $10 to $11 per million BTU, which is lower than $15 to $16, the current price level. But in the long-term basis, US LNG will not be the cheapest option. Anyhow, will go up. But in the short term, probably the switching to coal will limit the upward of the US gas price around more or less $5 to $6. But long-term basis, a US coal-fired power plant will be shut down, so will be changed. And the oil price will be fluctuated, possibly go down to below $80 or $70. So it becomes more comparable with the US LNG. And in addition to the price, the advantage of the US LNG is destination free. So we can bring any place the cargoes. So that can give us the opportunity of the trading. In terms of the long-term contract, I think I do not deny the long-term necessity of the long-term contract. Even the US LNG, we have a long-term contract, 20 years. But the grassroots project requires long-term contract, I understand. So buyers, sellers and buyers, producers and buyers will cooperate to promote a new project. However, existing project, after finishing first 20 years contract, they can be more flexible. Or expansion of the existing project will have less investment risk. So they can be more flexible. So I think it's the stakeholders of this market can discuss how we can make the gas to be most promising, competitive, and reliable, flexible, and affordable energy.
Thank you. So if we assume that some changes in the pricing and contractual system in Asia are inevitable. We have an example of Europe where these changes occurred just in a couple of years, and the share of spot indexed gas has already reached like 50%, and it was a dramatic shift, quite painful for many market participants, including Russia. So do you expect this sort of revolutionary development in Asia with dramatic change of the whole pricing system overnight? Or maybe some slower adjustments, or maybe just modernization of the existing formulas with changing the slope but not moving to the spot? There are different options available, and how do you think this negotiation or renegotiation process will develop? Yenni, you are in a unique position of being buyer and seller at the same time. How do you think it will evolve?
Yes, actually we're just learning to become a buyers. And I guess Indonesian market has not yet that developed. So I think why we look at the US for this potential import at the first stage is because, as Muraki-san says, that the transparency of the cost itself, it really helps us when we have to import and explain it to our, because when we import we have to explain it also to our government. And also the free destination clause. Because right now, I think we haven't really proven ourselves as a buyers right now in the community. We need to convince the market that we are good AAA class buyers, for example. So in this case, I think for the Indonesian side or Pertamina sides, we may be a bit more conservative in looking at the situation. And also that in regards with how long that we'd like to secure, again, as we mentioned, of course, we would like to see for the next 10 years. But perhaps, again, we should take the baby steps in securing the LNG from the market.
Peter, do you have to add on that?
Yeah, I'd like to build on that. I see the market evolving, and it's natural evolution in the marketplace for us. The last 10 years have had a lot of perturbations in the market. If you put the bookends on it, on the supply side, we've seen commoditization of LNG plants, so the IP now has fallen away in that part. And then on the sales side, of course, we're starting to see commoditization of regasification terminals and trading. So all of those dynamics are coming in there. There's now around about 30% of the market is sold on short-term or spot contracts now. 10 years ago it was about 1%. So you can see it's already starting to change, and it's been in place for a long period of time. What we're now talking about is different pricing formulas and matching that risk and reward, making sure we get adequate returns. And as we heard, there are certain profiles or certain pricing mechanisms required for a foundation project. There may be different ones for brownfield expansions, and I think suppliers understand that. Equally, often I will tell you, a project relies on those expansions to actually make an adequate return in the long term for its investors. So all of those dynamics, I think, are coming into the marketplace. Will it happen quickly? I really don't know. It will happen. As we look at it on the supply side, there will be twice as many suppliers in the marketplace in 5 years' time as there are today. And that's whether that's geographic or whether that's different companies coming into the marketplace. I think as Richard mentioned with respect to the demand side and the number of buyers is going up exponentially. So that's going to require a different relationship, and the ability of those buyers to take on either long-term or short-term contracts will also need to be accommodated by the sellers. The difference in LNG fundamentally, and it's an unfortunate thing, it's different to a refinery. I can make a huge refinery investment, and then the raw product comes to me, and then I refine it and then I sell it. LNG, by definition, generally has to be pretty close to its source. What's different in the US at the moment, it's an aggregation play. So that's a fundamental difference. And as Richard pointed out, it's a different business model for us. So all I would say is I think all these things are going to change. They're changing today. They've been changing for 10 years. I think the next 5 years we'll see an acceleration of it. Will we see trading hubs? Will they be liquid? Will they be virtual? Will they be real? I think all of those things will happen in the next 5 to 10 years. Where will they be? You can make a guess. There are people competing for that. That'll be driven by national politics and requirements. You're seeing historic suppliers, as Yenni has said, now turn into buyers. There's just a big dynamic in the marketplace. And of course, we haven't even talked about the new players opening up potentially in Mozambique, Tanzania, elsewhere, the advent of FLNG, and what does that mean from a technology point of view, the importance of that to industry in Korea in particular. So there's a lot of things happening out there in the market. It's an exciting time to be in LNG, to be quite honest.
So I think your colleagues are ready to comment on that.
No, I was just going to say, Tatiana, that I think that the transformation in the pricing mechanism will certainly be evolutionary rather than revolutionary. And I think that it'll correspond to the evolution of the global gas market. So, I don't think that the large investors of LNG projects resist gas indexing because they have a particular view of the future of gas prices. I think they do it mainly because it's still a regional commodity. It's not a global commodity, and you can tell that by the huge disparity in prices from Europe to North America to Asia. And that's why, the global crude market is substantially different. It is truly global. It prices about the same, given the same quality, and except, the odd occasion where you have infrastructure bottlenecks, but generally it costs the same minus transportation from one place to the other. LNG is not like that, and it may not be in our generation, but it will evolve over time, and that transformation will be evolutionary.
Thank you. Mr. Muraki, would you like to add?
Yeah, LNG market will be more dynamic and complex, and we don't need to stick on one index in Asia. But I would not deny the oil indexation. We can use an oil index, and Henry Hub coming into by the US LNG, and some of the energy projects may have the combination of NBP and oil index, which supply energy to both the European market and Asian market. For instance, in Europe, they have different indexes and hub prices and oil index, and buyers use those different indexes as a portfolio management. I think it's the Asian buyers, consumers, need to make the portfolio management to make the gas to be a more competitive energy in the market. And regarding the oil indexation, if the investor requires long-term stable return of the investment, I would recommend more gentle or S-curve type of oil indexation. Those were introduced in the 80s when the market were concerned about the low oil price. So investors require the reasonable continuous return of investment. So they proposed S-curve and gentle slope. So this is time we need to think about that. From the buyer side or market side, we experienced big volatilities of oil price. So to make the natural gas to be more competitive energy in the market against particularly the oil, the stable price is more attractive for the consumers. So I think that will accelerate the conversion from oil to natural gas and expand the market.
Thank you, great. So we have some short time for the questions from the floor. Use your opportunity to question the best experts in the industry. Please raise your hands and introduce yourself, and please, no statements, just very short, brief questions. So, Oh, here is one, and here is another question. Could you please bring the microphone? Please raise your hand so that they can see you. I think bring it. Maybe you can go to the podium, because I see we have a problem with microphone. Maybe you can just ask your questions here. Sorry about inconvenience. Please come here.
Tariana, Tariana?
Yes. Oh, we've got mic. Please give the microphone. Please give the microphone. Yeah. Introduce yourself, please.
Okay, thank you very much. My name is Mustapha Beidiba. I'm from Senegal. I work in the electricity industry. And my question is about the competitiveness of LNG for the African market. Knowing that the transportation of LNG from America to Asia is on the route of Africa. And if we solve the infrastructure problem, do you think that Africa could be an interesting market in terms of price for LNG? Thank you very much.
Who is ready to answer? Yes, Sir Richard, please.
Yeah, I would say it is going to be interesting. Number one, you make an important observation. When you look at the world, you know, the nautical miles from U.S. Gulf Coast to Asia, either through the Panama or around the Horn of Africa, around the Horn of Africa, actually, with the right kind of shipping, can be the cheapest route to Asia rather than going through the Panama. So it sets up an interesting dynamic. That being said, you know, we've had a tremendous amount of new markets open up in around the world, but particularly in South America and now in Southeast Asia. That's continuing to grow. And I believe what we're going to see as the economies in Africa continue to grow, we're going to see once again the need for natural gas, and LNG will play probably a part of that. And we'll see if, as we haul LNG from the U.S. Gulf Coast to Asia, whether or not some of those cargoes drop off on the way. That'll be, I would say, a longer-term play, though, and we'll just have to see if the markets do open up in Africa.
If I can briefly add to that, I mentioned before commoditization of different parts of the market. Well, one part of commoditization has been in receiving terminals. So historically, receiving terminals had to be big tanks, long-term investments, large jetties out to sea. Receiving terminals now are commoditized. You can get them on a 10-year lease. And so for many countries or many buyers, the new commoditized receiving terminal where it sits offshore is becoming very attractive. And so I would suggest to you that as sellers, we typically keep a little bit of gap there between our capacity number and what we commit to market. We do that for reliability purposes. So there will be, as more sellers come into the marketplace, there will be more free volumes out there. I think each buyer will just need to take on their own investment risk.
Okay, thank you. One last question. I'm sorry, we have a really short.
Thank you. I am Mr. Ali Hashed from Algeria. I have two questions relative to cost. we have mentioned that most of the, or part of the gas produced from shale gas is not profitable at the current price today. What is your evaluation about the volumes of these gas, which is really profitable? I have an example I have just read an article saying that the Barnett Shale, for example, 12% of the volume produced is profitable at the hub price today, and 70% of the gas produced is needs to have an $8 per million BTU price.
Okay, who is
The second
ready to
question
answer?
is related to the cost of new projects in Australia. You mentioned 4 times for building a new LNG facility. What is your expectation about the total cost of the project?
Well done.
Well, I'll try to address the economics of the shale gas and perhaps reinforce some of the comments that I believe Richard made earlier. But, you know, in the United States today, there's over 1,000 drilling rigs drilling horizontal wells. And almost all of these horizontal wells are directed toward shale resources. But not that many of them are directed toward dry gas shale resources. Most of them are targeting liquids-rich shale oil. And so a lot of the gas production, the new gas production that's coming from the United States is really associated gas from these liquid plays. And it's the oil, the profitability of the oil, that's driving the economics of the well. And the gas is really a byproduct as much as anything else. So as we look forward to 2020, 2025, there's a lot of dry gas shale resources in the United States, areas of the Haynesville, areas of the Marcellus, that are going to be profitable, but not at $3 or $4 or maybe even $5 in MMBTU.
Thank you. Okay, we have to finalize our session, and I will ask our speakers for 1 minute, very brief summary. Richard, let's start from your side.
Well, great discussion. I hope the comments were beneficial to the audience. I would just say a couple points. Number one, I think we're all optimistic about demand for LNG in the long term. And you know, I've thrown out numbers, but you can talk to many analysts and other consultants, and you hear the same story. So the potential for this industry to continue to grow at the historic growth rates of 4 to 5%, which for those who in the energy industry understand, you know, that is super high growth compared to the 1% for overall energy growth. So the potential is there in the LNG side to grow very quickly. The issues that we have to deal with is, as an investor in this business, is we've got to make sure that we control our cost to ensure that we can provide a product to our customers that's affordable. And we have to bend that cost curve. That's one of the biggest challenges, and that's the reason why I brought it up. We have to bend that cost curve to ensure that we can maintain competitiveness and hit that potential for demand that I talked about. Because the buyers, they would like to, you know, we can come up with lots of different ways to price natural gas on a lot of different ways, but at the end of the day, as an investor in the supply side, to provide that service to the buyer, we're going to have a pricing formula that ensures that we have stability over the long term and we make a reasonable return. So that's the challenge that I see in our industry. We've done it over the years for 30 years plus in this industry. We've always been able to solve these problems, and I'm confident that we will continue to be able to solve these problems and continue to grow this industry on historic levels.
Great, thank you. Yenni?
Yes, I think from our point of view, this is just the fact that Indonesia is now becoming a potential buyers. So again, I mean, as the current position, still as a seller, and potential some volume that can be made also from Indonesia, again, and also as a buyer, pricing, as said earlier, is going to be a key also for us. Depend on how you're going to look it. Thank you.
Peter?
Look, I'd sum up and say the industry is going through a natural evolution, not revolution at the moment. It will be orderly, although it won't always seem that way, but it will be an orderly evolution because the fundamentals of investment will always dictate in the long term for us. What we didn't talk about today, we talked a lot about pricing. We didn't talk about the demand and the creation of demand. My view is there is an untapped market out there. It may be driven by regulation. It may be driven by community demands for clean air, clean water, safe food. But particularly as you look at regulations around low sulfur levels and so forth, I believe there's a huge market out there that at this point hasn't been tapped into. There's big potential.
Thank you. Mr. Muraki.
In this panel discussions, I do not find any big differences between sellers and buyers, producers and buyers. But the LNG and natural gas value chain requires quite a huge investment. So the stakeholders need to work together how to share the risk and reward. And in this new dynamics of the gas market.
Great, Don.
North America gas is coming. It won't dominate, and it won't be cheap, and it won't be without risk, but it is coming. I guess the other thing I'd say is North America does not have a monopoly on shale gas resources. Thank you.
Fantastic. So, summing up everything that we discussed today, I think we are getting finally quite an interesting and inspiring picture with growing demand, with booming LNG development, with North American gas coming, though with some questions, but coming definitely, with a long-term relationship and stability being the task of all stakeholders on this market, and it gives us some hope that they will find an opportunity to agree to develop new models that will be acceptable for everybody. Of course, with the costs being a key issue, and it's always a headache of LNG project investors and operators, and it's also a question of technological progress maybe. So there are lots of opportunities on this way forward, and I hope that finally this market will show the next wave of boom, the next wave of development for the prosperity of the Asian region as a whole, and to solve the environmental problems and actually to provide sustainable economic development. So let's thank our incredible speakers for their input, and I ask you to join my applause. Thank you. Just a second.